Hello and welcome to the June edition of Beef and Lamb Market Update. Let's begin with the beef sector today. During May, prime cattle prices have moved gently upwards in line with the seasonal trend for this time of year to stand at around 365 pence per kilogram. Prices are currently slightly above the 5-year average and last year's prices for this time of year. It is not unusual for prime cattle prices to gain strength during the spring as retail demand begins to pick up. Now let's take a quick look at the cow market. Cow prices have been gaining strength for a while and currently they stand at around 262 pence per kilogram. As I have been reporting since the start of 2018, industry reports suggest that demand for manufacturing beef is currently strong, with more recent reports suggesting that demand may even be moving upwards, with supplies not quite keeping up with this growth. Therefore, over the coming month, cow prices may continue to be supported. If we take a look at cow prices across the EU, UK prices are now trending above French cow prices in sterling terms, although the French price has been gaining some strength in more recent weeks. Beef and veal production in April stood at around 77,000 tonnes, 4% higher than in March 2017. Unsurprisingly, considering the strong prices for cows, a large part of the increase is coming from cow beef production. Using DEFRA data, it can be estimated that cow beef production in the year to date stands at just under 10% higher than this time last year. Processors will already beginning to prepare stocks ready for the summer consumer demand. Moving on to the lamb sector. In April, the GB deadweight old season SQQ peaked at just over 600 pence per kilogram. Since then, the measure has cooled slightly to now stand at around 575 pence per kilogram. Reports are continuing to suggest that total supply, so domestic production added to imports, is just behind total demand, so domestic demand plus exports. Export demand may come under pressure if GB prices continue at such heights. The GB quote has now moved above the French lamb price, so it historically has acted at something of a ceiling. The price rise of GB lamb has been exaggerated on the European market due to a slight strengthening in the value of sterling against the euro. On the other hand, global supply and demand balance is currently reported to be quite tight, with New Zealand prices continuing to be recorded at very high levels. Considering the somewhat bullish price recently, it might be expected that sheep meat production would record a sharp rise in April, but this did not happen. This was perhaps due to a shortage of new season lambs available for slaughter rather than a lack of old season lambs available. During March, the UK net trade position was negative, following on from 9 consecutive months of being in a positive position. During Q1, UK fresh and frozen imports declined by 1% on year earlier levels, with imports from New Zealand declining more sharply, but with some of this fall offset by an increase in shipments from other EU countries, which perhaps came opportunistically due to the high prices currently being recorded in the UK. Exports during the quarter rose by 8% year on year, with increases being recorded in all the key export markets for the UK. If the high prices of late continue, will depend upon supply and demand continuing to balance, although export demand may now come under some pressure due to the higher prices and if sterling continues to strengthen. How the finishing of new season lambs goes will also of course have a major impact. Lambing in 2018 were difficult, the conditions were tough, and therefore there may be a delay in seeing large numbers come forwards. Altogether, prices may continue to be supported, at least in the short term. Every week, the AHDB Market Intelligence team Keep the industry up to date on the latest news in the cattle and sheep sector through their newsletter, which you can subscribe to for free by emailing the team on the email address below.